Okay, well, good evening, everyone. Thank you all so much for joining us on this still chilly April evening. Where I am, we still have snow. I'm sick of snow. So I'm excited to talk about something more interesting than snow this evening, which is currencies and banking and the current economic climate and situation. My name is Tanner Hnidey. If you don't know me, I was the former vice president of economics for the Alberta Prosperity Project before I resigned last fall to pursue more independent endeavors. But I'm so grateful that they've asked me on today to have this discussion and to host this discussion with the CEO of Bow Valley Credit Union, Brett Oland. And so, Brett, if you want to give just a quick introduction to the audience that's watching right now, I think they'd appreciate that.
Sure. Bringing the band back together, Tanner. Really appreciate this. Happy to be here. We did, I think it was about 6 months ago, we did one on currency and had a lot of fun doing it. And so hopefully we can be educational and entertaining at the same time. So that's great.
Oh, absolutely. It's going to be a lot of fun. And so before Brett begins, I thought I would give just a quick synopsis of the current situation, at least as I understand it, in Alberta and Canada at large. What I'm seeing right now is, well, we as Albertans and Canadians all across the country and the continent are engaged in this battle for reality. Because on one hand, we have reality itself. I'm wearing this black turtleneck and I live in Alberta. And Brett Oland's the CEO of Bow Valley Credit Union, and so on and so on. The sky is blue. But in today's modern society, those are radical things to say. It's radical to talk about the truth. It's radical to talk about reality as it actually is, because those who are in government and those who are in positions of power themselves are radical. Progressives who run the government are increasingly radicalized. And so everything's flipped upside down. So to speak about things as they are, right side up, is something so foreign in today's society that it packs a punch, and it's impactful and it's powerful. And so we have then this battle that we're currently engaged in. You have on one hand those who want to talk about reality, those who want to live in reality. And then on the other hand, you have those who want to disregard reality and actually dominate reality. You have politicians in power who want to do so. You have bankers and a massive industry that wants to get rich quick, and as a consequence will engage in foolish and dangerous financial decisions to try and earn a quick dollar or make a quick buck, etc. And it's led to the current situation that we're in right now. We have a government in Ottawa, for example, who wants to create a new reality as they see fit, even though, again, it disregards reality as it is. And then we have individuals like all of you who are here tonight who want to submit to truth, who want to live truthfully. And so we're working our hardest to try and spread that message now across the country and across the nations. Now, one of the ways a politician or a government, for example, can control reality, which is what they want to do, is with currency, is with banking, is with economics. And it also means that the currency itself can't control them, right? You have, at least for a little while, although he wasn't an economist, I'm going to talk about C.S. Lewis quickly. C.S. Lewis, this brilliant author, he wrote the Narnia books, wrote an exceptional essay called Willing Slaves of the Welfare State. And in it, he discusses how if government, if bureaucracy, if a few central planners have control of economics, they also control the individuals in the nation. Lewis's conclusion, is that if an individual loses an abundance of freedom, it's often because he's given up a lot of his economic freedom first. If the government controls economics, say if they're the ones who are in control of feeding a family of four, then fewer and fewer Canadians are going to stand up to the unjustified, rebellious, and corrupted actions of the government at large that so flagrantly disregard reality. And it's no stain against the Canadian. He's just trying to feed his family. But if he doesn't do what government says, then government, for example, freezes his bank account, or government takes away his welfare check, or government does this and that to steer the society in the direction that they want to go. But as I mentioned before, if that's the way government operates, if that's the way big bureaucracy operates, which it is, then they have to be able to control the currency. It means that the currency can't control them. A hammer doesn't use a carpenter uses a hammer. And with that hammer, he builds the structure that he wants to build. In the same way, government uses the tool of monetary policy, of banking, of financials, of economics, of money, to oftentimes create the hideous and oppressive structures that they desire as well. And so, in large part, this is exactly why government has such a voracious appetite to keep fiat currency or to introduce digital currency. If government needs more money, well, they can simply print some more money because fiat allows them to do so. If they want to tighten everything up, which doesn't happen often because it's usually not politically profitable to do so, then they can turn off the presses. They can basically do whatever they want with this fiat currency in order to steer society in the direction that they want it to go. And that control might be so much more expanded with a digital currency. And so again, for that reason, I'm so glad to be with Brett tonight. Again, he's the CEO of Bow Valley Credit Union. And he has a couple of points that he wants to talk to all of us about tonight. As he's doing so, he's going to show some slides and talk about 4 specific points, I believe. As he's doing so, if you have questions, there should be a little box, a typing box, etc., near the bottom of your screen or somewhere where you can type questions and send them in. And then at the end of Brett's presentation, we'll do our best to get through and discuss as many conversations or as many questions as we can filter through. So with that, Brett, if you'd like to share your slides, we can start with your presentation on everything you have to offer.
Great. Thank you, Tanner. Really appreciate that. Just move up the screen here. All right. You see the slides all right?
I can see them. You bet. I think everyone else can see them too.
Great. Well, yeah, thanks very much for that introduction, Tanner. That's a great segue into what we're talking about this evening. And as mentioned, I'm Brett Oland. I'm the CEO of Bow Valley Credit Union. For those of you that don't know me, I've been in the world of banking for about 20 years. And I'm a CPA, a CA by trade. I also have an Institute of Corporate Directors designation, as well as a Bachelor of Commerce from the University of Calgary. So just a little bit of an agenda for tonight, and it's just to give people a better understanding of the implications of digital banking and sort of what's on the horizon for what we see in Canada. And a lot of these things are pretty high level, but happy to dive in, Tanner, if you just sort of want to interrupt as we go along. So I want to talk a little bit about digital banking. That's very much on the forefront. A lot of you people that may have gotten letters from TD or Scotiabank lately are very familiar what they're doing there with digital banking, and I can sort of get into that a little bit. Central bank digital currencies, like you touched on, Tanner. There's some new changes that came with the new federal budget to Fintrac that I'd like to touch on. And then as well as we've seen a lot of US banks and European banks blow up lately, and I just sort of want to touch on those a little bit because it may be of top of mind of people. So when we talk about digital banking here, there is a lot of nuance. And when I'm talking about digital banking, I'm not talking about a central bank digital currency because there is a significant difference. So Forbes defines digital banking as basically just the ability to do banking online or through a mobile phone. So here's a very rudimentary model of what it is. And so you see at the bottom there's the banking system. And if you think of this as basically just a bit of an elaborate ledger, and it just keeps track of dates and times and who owes what to who, and it's basically just a big accounting ledger and all it is. These banking systems, especially in Canada, are archaic. For example, RBC's banking system is well over 50 years old. It might even be 60 years old now. So it's quite an archaic piece of software. And it doesn't really need to be updated all that often because all it is really keeping track of transactions that are happening day to day. So it doesn't need to be very robust. The part that allows it to talk to the general public or you is this digital banking platform, this piece that basically sits on top of the banking system and talks back and forth to the banking system. And since the banking system doesn't interface very well with people, they've created this layer of digital banking to basically communicate and talk back and forth and serve as a bit of an intermediary between two parties. So inherently, there's nothing really nefarious about digital banking, but it's actually what they do with it. And so when they do things like talk to you, the government or other third parties, about what you're doing within digital banking, I think of that as a bit of the nefarious part. So by itself, it's nothing's wrong with it, but as they sort of push it outwards to other organizations, that's where I see the problem coming up. So I'm going to pick on TD tonight because we've had a lot of interactions with people that TD is forcing them to sign a digital banking agreement, terms and conditions, and basically people feel a lot like they're signing their life away with these things. So I read through the terms and conditions. It was available on the web for TD, and I think people are rightly so getting the hairs up on the back of their neck because some of the stuff is pretty scary that they're putting in there. Some of the stuff you have the ability to turn off, such as location sharing or push notifications, or even biometrics, which is like fingerprint and facial recognition. So you can actually turn those things off, and so at least you have some control over that. But some of the things that you can't turn off within these terms and conditions is the collection and the use and disclosure of personal information. And basically, they cite it as basically being their information once you put it in there. And they share this information with TD's worldwide affiliates. And when I was doing this presentation this morning, my brain went right to the World Economic Forum, and I wondered if TD had a relationship with the World Economic Forum. And so sure enough, here's a screenshot of the World Economic Forum's website, and there's TD Bank Group. And so that's exactly the type of affiliates that they're talking about in the terms and conditions that they're sharing your information with. And I don't know about you, but I don't love the idea of sharing my personal information with Klaus Schwab. Also in the terms and conditions, they can effectively make changes to the agreement at any time regarding your privacy, ownership, and terms. And basically, they don't have to really forewarn you as a result of that. So rightly so, people are pretty upset about what TD's doing with their digital banking. And we've tried to fill that gap because we're really not interested in any of this business about sharing people's information outside of our organization. We consider your privacy private. And so we're trying to push back to some degree on all this nonsense where basically your information is a commodity that's being shared across a number of different platforms. So Tanner, I'm not sure if you had any questions regarding specifically digital banking, but I can move into central bank digital currencies next if you're all right with that.
Sure, that's perfect. I liked what you said about how, as far as I understand it, technology is neither immoral nor moral. It simply is, and it's all dependent on the way the individual or the organization uses that technology that determines the future of the society. And so when you were talking about how on its own there's nothing wrong with digital banking, I like that because I agree. It's just the way that these individuals and organizations and groups seem to be using it, it immediately becomes nefarious. So I thought that was a worthwhile point. So yeah, if you want to keep going, give her.
No, absolutely. And so that leads very much into a central bank digital currency. So the digital banking and the central bank digital currency are actually completely different things, but you can sort of see those stepping stones towards a central bank digital currency on what they're sort of suggesting there with the terms and conditions and basically trying to control your life through your finances. So now into a central bank digital currency. And so this is right from the Bank of Canada's website. And they just suggest that, simply put, a central bank digital currency is digital money issued by a central bank. Again, nothing really nefarious about that, but the key difference between what we have today and what the world, the worst world possible with the central bank digital currency, is the difference between where the liabilities sit. So Tanner, if you had $100 and you deposited it into a financial institution, it's basically your asset of $100, but it's also the liability of the organization that you deposited into. So that's what I mean when it's a liability of the organization. So the key difference is there's a liability of the commercial banking sector, like a TD or a Bow Valley Credit Union or an RBC. But with the central bank digital currency, your deposit becomes a liability of the central bank. And I'll just try and describe this a little bit better here. So you can see there that dot in black, that's the Central Bank of Canada. And you have your financial institution, which is, your BMOs, your TDs, your RBCs, the Bow Valley Credit Unions of the world. And if you think of the Central Bank of Canada as basically the house of finances for the country of Canada. And they also are connected, but they're not one with the treasury of Canada. And so if you want to think of the treasury as basically the checking account of the government of Canada. So there's a reason why they're distinctly separate, and that's because they're supposed to make decisions independent of each other. So therefore, the Central Bank of Canada shouldn't care about politics, especially around something like inflation or something like that. Their mandate is to basically keep a stable financial system, and that includes keeping inflation under control. They're not supposed to get involved with politics and basically pandering to politicians, which I think we've sort of changed over the last little while. Basically, the government's piggy bank is that treasury, and that's where they're supposed to do their spending. And so it's not new, something like a central bank digital currency, where they've wanted to control finances, but inevitably throughout thousands of years of banking history, they've discovered that that's a bad idea, and I'll tell you why. When you have an intermediary like a financial institution set up between the central bank and the government and you, basically I care about profit and loss within my organization. RBC cares about profit and loss in their organization. If the finances go directly through the Central Bank of Canada, then what does the government care? They don't care about profit and loss. They don't care about balancing the books. All they care about is their programs. And so inherently it's very troublesome that they even want to go down this road. But let me ask you this question, Tanner. How do you know that there isn't a central bank digital currency right now?
Well, before I answer, I would say I liked your comment about profit and loss insofar as in economics, we talk about how important profit is. Socialists tend to make it out to be this big, bad, evil thing, but it's really not. All profit does is give you, for example, at Bow Valley or me working at my job, a signal. It tells me that I'm doing something right, or if I'm losing money, that I'm doing something wrong. And if I'm doing something right, if I am making profit, it means that that I'm helping society, that I'm bettering society as a whole, because they're paying me to do something which they find valuable. And so I completely agree, firstly, about your point that profit is so important in any private sector, let alone the banking sector. And so if you did have a currency that was regulated by the government, not regulated, but if you had a banking system like that, totally regulated by the government, who doesn't care about profit, but instead cares about votes and cares about power, you would see demonstrable inefficiencies and dangerous control. So I totally agree with that. And then with regards to, I suppose, your central bank, how do we know that we're not under a central bank digital currency right now? I suppose first I would say, of course, most of our banking already is rather digital. It is just numbers on a screen. But at any rate, I suppose I would say I can pull out cash. I can use paper cash to go and make transactions. I can do so, at least as best as I understand it, with relative anonymity. I can pay, if I wanted to, under the table for something. If I wanted to make a trade on Kijiji, I could do that with those things without having to log into a computer and scan my hand or my fingerprint to see if I'm able to pull out these dollars from this regulated bank.
Yep. No, and you're absolutely right. And so, but if you look sort of at the top of the screen there, if between the Treasury and the Central Bank of Canada, we really have no way of knowing whether they're basically just typing numbers into a screen and creating currency. But this ties very nicely into your other comments of when you have to have a profit and loss, and basically you feel pain if you don't have that profit or loss. The same thing happens in society. So I don't think it's any surprise that we're seeing increased crime. We're seeing increased drug abuse. We're seeing increased homelessness. We're seeing 35-year-olds live in their parents' basements. We're seeing people lack of satisfaction in life, unable to afford housing. Like, this is all the result of basically what I term malinvestment in society that the government's been doing, really ramped up over the last 10 or 15 years. So you're absolutely right. So.
Yes. And you even look at, how many false signals that have come from government, for example, for handing out all of this money. They've told all of these enterprises, these businesses, these tech startups over the last how many years that it's time to invest and it's time to really, make a go of your new product. Even though all of it really was built on sand. The wealth that was created wasn't really wealth at all. Instead, it was printed money from the government that's been floated into the economy. And now that money is drying up, and now that people are in a pinch due to inflation or interest rates or what might have you, they're not so flagrantly spending on things they otherwise were 2 years ago. And now those new startups and those new businesses are drying up very quickly. I don't know if you saw, but even McDonald's, they closed their top headquarters for a while because they're tight. They're in trouble too. And so it's across the economy. Yeah.
Yeah. And what I term all that sort of showing up within general society, I call that price truth. And that's basically the exposure of all this money printing coming home to roost.
Yes.
Is really what it is.
Yes.
So just a little bit back to this. In the most nefarious form, so with this model that's on your screen right now, there may be a central bank digital currency sort of at the higher levels, but you're right, you wouldn't see it at your financial institution and your level. So what inherently a central bank digital currency is you would deal directly with the Central Bank of Canada. So again, back to your liabilities, it would be a liability of the Central Bank of Canada. And this is where the really nefarious stuff can come in. So I'm sure we've heard these stories before of basically they can turn off your bank accounts on a whim. You could be taxed daily if they wanted to. They could put time limits on your money and basically say you need to spend this by the end of the week. Otherwise, it disappears because we need to ramp up things in the economy because we might go into a recession. You might see things if the technology is there enough to basically dictate you've spent too much money on your carbon footprint this month. You can't buy a tank of gas. You have to buy a head of lettuce instead of you're buying a steak or something like that. So you can see where this path goes if you allow them to. And something really, I think would be very scary product was if they ever merged basically the central bank with the Treasury. And so they've even talked about this in the US at some points, but that's the worst of both worlds. So basically that's the checking account and the equity of the House of Canada merged into one. So the government would have complete control of basically the finances of Canada. And so I think it's important to note, Tanner, that this, in my mind, is a number of years off. I don't think it's any surprise that these group of central dictators, these central planners, are quite arrogant. They think they can snap their fingers and come up with a central bank digital currency and it's going to work seamlessly. And just to give you a highlight of how I think that's inherently incorrect. Alberta, Saskatchewan, and Manitoba credit union systems have been trying to streamline our payments process. So I'm talking about wires, checks, e-transfers, AFTs, EFTs. And we've been working at it for the better part of 6 years and spent over $200 million on it. And so that's just one piece of banking. So if you can imagine trying to broaden that scope to the entire country of Canada and touch all aspects of it, it's going to take billions and billions of dollars. And I think they're years and years away from it. So I think there's a bit of comfort in understanding that, but back to the earlier message with TD, that is definitely a step towards something like this where it is taking away your freedoms and controls. So
right. I know G.K. Chesterton has this great quote where he says, the best way to resist a tyranny, or in this case, a central bank digital currency, is to resist it before it exists. And so I think the sooner you can hop on something like this, as we are now, the more effective and the greater the opportunity the nation has itself of stopping its imposition. That to me seems to be a much more desirable outcome, than actually having it imposed and then trying to get rid of it down the line. That would be much more difficult, I think, if not impossible. And I also remind the audience, again, if you have questions, keep asking them. We're getting a lot in. It's great. We'll ask them at the end. So just type them in the box below. And as you listen to Brett and you like something he has to say or has a question, just ask it and we'll do our best to get through all of them at the end. So with that in mind, with the Treasury, maybe if you could just clarify. So you have a central bank here in Canada and we have a Treasury. So basically the Treasury itself is how government or where government gets the money to pay for its services, in essence. And then if it needs more money, it goes to the central bank.
So yes. Well, yes and no. Okay, so the way it works is the Treasury is actually basically, like I said, the checking account
right.
of the government. So they take in tax receipts,
right,
and they spend it out on government programs. But what we've seen, especially in the Western world these days, is they spend beyond their means, right?
Right. Sure.
So in the U.S. alone, I think they expect it to be about $2 trillion this year. So they need to be able to get the money from somewhere. So what they do is sell Treasury bills or T-bills or bonds out into the greater economy. And so if I was the Treasury and I sold you a $100 T-bill, I'd take your $100 T-bill and you'd take this Treasury bond
right.
into your possession, and that's your asset. And so that's basically how they fund the shortfall. But now they're running to the end of the rope with something like that. So, for example, with inflation running hot, say yesterday I sold you a $100 T-bill, and the rate of interest I was going to pay for you on it was 5%. And then today I go to you again, Tanner, I need $100 again. Do you want to buy one of these T-bills? And you go, I don't really like the way things are going, so no, I'm not interested in taking on that T-bill for 5%. But then I basically the governments have to fill the void. So they scramble and basically I would go to you, Tanner, would you take this $100 T-bill, but I'll give you 10%? And you'll go, yeah, maybe I'll take that. And so what you see happening in society today is those yields, is what they're called, on those bonds are rising. But then when the yields get too high, basically the Treasury has to pay those back. And so you get into a place where the interest price on those bonds is a very big portion of your expenses in the Treasury. So what the central bank does is it goes into the market and buys those bonds. So whereas you're hesitant to say, I'm not interested in buying that bond unless it's at 10%, the central bank rushes in and buys it and at that 5%, so to keep the yield suppressed. So that's exactly what quantitative easing is buying those treasuries to keep the price of the yield down.
Right, right. Which I suppose then is why you would see, with regards to quantitative easing, inflation in the bigger asset markets first, and maybe not so much in the smaller ones.
Correct. So you'll only see inflation if it gets out into the real economy. And why we're getting so beat up by inflation right now is because the Treasury threw all that money out into the real economy. So that's the big difference between 2008 and 2020 is in 2008, after the great financial crisis, it was basically the money was contained within the central banks and the financial institutions, and it didn't get out into the real economy. But as soon as basically they announced all these government programs, the quantitative easing got out into the real economy, and it shows up as inflation.
Right, right. No, it's good information. So if you want to keep going, Giver, we've got a lot of questions coming in. It's great. Keep them coming. And on to Fintrac.
Sure, yeah. So Fintrac, this was just announced last week, some changes that are just summarized. And so if you're not aware, Fintrac was the main tool that the government used to basically suppress the Freedom Trucker Convoy and suggested this was the vehicle that they used. And it started back in after 9/11, so about 23 years ago. They came up with this, of course, for our safety and soundness to try and protect us against those nasty terrorists. It's a very blunt instrument, is what it is. And what they've recently announced is basically to turn that blunt instrument into a bit of a scalpel. And so they're throwing a bunch of money at this Fintrac program in this year's budget, and these are some of the things that they're going to do. And of course, it's always about our safety and soundness. So they're using it to strengthen investigation and enforcement in information sharing tools within Canada's asset management liability system. And these legislation changes will be to give law enforcement ability to freeze and seize virtual assets, information sharing between law enforcement, CRA, and Fintrac, introduce new offensive structures for financial transactions trying to avoid Fintrac, strengthening the registration framework, criminalizing some operations. And probably one of the scariest things that they're doing is when they say something like establish powers for Fintrac to disseminate strategic analysis related to financing of threats to the safety of Canada, what they're talking about there is AI. So they're actually creating AI bots right within the Fintrac system. And as I mentioned before, Fintrac is a fairly blunt instrument, and so it's been around for about 23 years, and I don't think there's any recorded, charges being laid or arrests being made as a result of Fintrac. So they've had all this information for years and years and years, but haven't really been able to do anything with it with a blunt instrument. But if they tie it to the horsepower of artificial intelligence, that's a very different tool that they have in their possession. And so a few other things in the financial sector that they're taking a look at, all under the rouge of safety and security of Canadians, but we know their real game, that they're basically trying to grab up power. So they're talking about refinements to the Bank Act, the Insurance Act, the Loan and Trust Act, Officer of Superintendent of Financial Institutions. And again, that bottom one basically has to do with Fintrac. And they're calling it to modernize the federal financial system to address emerging risks, their words, not mine, of the financial sector. So some of these changes that they're doing, expanding the mandate of OSFI, which was the one that ultimately controls Fintrac, and as well as they're as bold as basically OSFI can take control of federally regulated financial institution. So very, very scary stuff. And they're also giving additional powers to the Minister of Finance and the Director of Fintrac to sort of get these security threats under control within Canada. So some very scary stuff, but I think it's important that you understand that we can get away from this to some degree. We can start talking to our local politicians and tell them that we don't want to be spied on by Fintrac. That was a big portion of what Danielle Smith was trying to do with the Alberta Sovereignty Within Canada Act is also create an Alberta Bank Act and revise the Alberta Credit Union Act so they can basically step away from the feds what they're trying to do with Fintrac, because it is a legislation that we have to follow, but we need to be able to try and get some tools to try and get out from underneath it. Also, join a local credit union. Credit unions aren't regulated by OSFI, where most of these tools are coming down. We're regulated by the Credit Union Deposit Guarantee Corporation. So although we still have to listen to the law with Fintrac, we find that one more step away from OSFI is always a good thing, because OSFI is the one that mandated that financial institutions have all their employees vaccinated, as well as really had no objection to freezing people's accounts during the Freedom Convoy. And whereas the Credit Union Deposit Guarantee Corporation is regulated by Albertans for Albertans, and the federal government has no jurisdiction other than Fintrac, which is a bit of an Achilles heel that we need to rectify as soon as we can.
Right. So, sorry. So credit unions are not under OSFI, but they are under Fintrac.
Yes, that's correct.
Right.
So
right.
Fintrac is nationwide, and so
Mhm.
again, that it's a very blunt instrument, but they're trying to sharpen it up. Is what they're doing. So,
Right. And always under safety and control. It's
yes.
they always love safety. It's the funniest thing. When you look through history, even now, it's the strangest thing, because for the whole of history, things like this subjective level of safety and security in and of themselves aren't moral goods. They're not self-evidently moral, like thou shalt not murder is self-evidently moral. And yet government, using this tool of safety and security, acts like a bulldozer and works their hardest to impose these things which will otherwise restrict and limit our freedom to a demonstrable degree. But it's really a brilliant strategy, because it's so difficult, at least on the surface, to argue against safety and security, because it invokes a pathos, an emotion that says if you do argue against it, well, you must hate safety and you must hate security and you must not care about your fellow man. But of course, that's a lie. That's false. It's just that we believe the more appropriate way, the more effective way to actually guarantee a man's safety is to give him freedom first, and then the safety will follow. The vice versa doesn't hold true.
And that's always the way it works. And if you opt into that safety, basically you have a sacrifice that you're giving up control over your life. And I just want to step back a little bit, because people often say, well, Brett, you're being hyperbolic. The Canadian banks will never allow this to happen, where they're basically going to allow a central bank digital currency to happen. Now, if inflation runs hot for the next number of years and people are absolutely just being decimated out there, they can't put food on the table, they can't, get a roof over their heads, they can't get a job, whatever the case may be, the general population might go to the governments and beg them to fix a problem. And they'll come up and say, I've got a solution for you. It's a central bank digital currency. It'll be great. I'll deposit money right into your account. You don't need to think about it. I've got you. And so again, that safety net is basically taking away those freedoms. And so it's a bit of a trap, as you know.
Right. Now, just before we move on, I'm just going to ask this one question that I saw come in. It's a good one, and I think it works if you could answer it right now. Barbara asks, she goes, Brett, so are you saying that if Danielle Smith revises or creates an Alberta Banking Act and the Credit Union Act, then you'll be able to get away from Fintrac? Is that what you're saying?
That's the hope. Yes, absolutely. We can come up with our own controls of basically how, I admit that there's bad people out there and we probably want to freeze their accounts. But the thing is, if it's a peaceful trucker protest, I don't know if I agree with that. But, if it's somebody that's going to bomb a building or something like that, maybe that's legitimate. But the thing is, it's that overreach where Albertans need to be in control of this. It shouldn't be Ottawa.
Right. Right. Yeah, it makes total sense. The more decentralized the power, the better. Oh, almost invariably. So if you want to keep going, the discussion's great. I think we got, so one more point? One or two more?
Sure.
Yeah.
Yeah. So one
Keep
more
going.
point
Yeah.
that's quite short, and this came out of, and a lot of people were concerned with this, especially within our organization. They saw Silicon Valley blowing up in California there, Signature Bank, and then it manifested itself over to Credit Suisse, which is a very big, very long-standing bank in Europe. Deutsche Bank also is having some trouble. So people have been asking the questions: Are my deposits safe? And I created this little chart to sort of help put people at ease and show you actually the power of the credit union system, even compared to Schedule One banks. So each one, each schedule bank, so your BMOs, your RBCs, your CIBCs, that type of thing, they fall under what's called the Canadian Deposit Insurance Corporation. And so all credit unions and banks hold what's called either statutory liquidity or bank reserves. And so basically that's your first line of defense. If there's something that goes wrong, there's a bit of a run on liquidity, then we tap into these reserves that we have to basically keep up with the liquidity that people want to pull out of the bank, and which is exactly what happened at these other banks. CDIC insurance is only up to $100,000. There's ways to work around it for some degree, but if you had $1 million in an RBC and you only had the one level of CDIC insurance, you're only insured for $100,000. So that $900,000 that you thought was safe and sound in the bank is gone. With Alberta credit unions, you actually have 100% deposit guarantee. So no matter if you have a million, 10 million, 50 million in the bank, it's all protected under the Credit Union Deposit Guarantee Corporation. And we at Bow Valley Credit Union took it even a level even further. And we wanted to basically back our capital and our equity with a hard asset within our organization. And if you look at the root of the problem of the Credit Suisse or the Silicon Valley Bank, it was capital that was the problem. And so we're working with the regulators right now. We're talking about it back and forth. They sort of don't love the idea, but I think ultimately we will be successful. But we've coined this phrase of gold backed for our organization. And so we actually have physical precious metals within our stores at Bow Valley Credit Union, and it makes us a very unique organization. There's nobody else in Canada that's doing this. You could do it with other assets, which we may look into, such as farmland or commodities, something else like that makes it really interesting. But we wanted something tangible that people could really latch onto. People understand gold. They understand that it's been an inflation hedge for thousands of years. It's been around for thousands of years, and effectively it's what all currencies revert to at the end of the day. So I think it's important for people to understand where they are protected and where there's a bit of risk within organizations. And I'm not suggesting that there's going to be a bank run in Canada at all tomorrow. I think we've got some of the most sound financial systems in the world. But the thing is, it is a probability, and whatever the height of that probability is, I think it's important for people to consider.
Right. Yeah, and I'd say so. Obviously, I don't work for Bow Valley and I don't work for APP. I'm just an independent economist, but I do like gold. I like gold a lot. And if it were up to me, then I would say, well, I think Alberta should get on a gold standard, and a new school gold standard. But at any rate, well, that was excellent. That was an excellent presentation as usual. It was filled with information and exciting information, especially for me as an economist, I have to say. It was informative. And so if in the audience you're watching and you have questions for Brett or myself or both of us, what might have you, just keep asking them. They're going to start coming up on the screen. I have a whole bunch here in the chat. And so we're going to try and get through as many as possible. We're going to have a fun discussion, which you might not have known was possible with economics, but I promise it is. And so, we're going to have some fun. So the first question here from Kathy. She says, Why are not all credit unions backed with gold like yours, like Bow Valley Credit Union? It's a good question.
Because it's not easy, Kathy.
Mm.
It's taken us the better part of 3 years to get to this place, and we're still having conversations with our regulator around it. Because if you look under IFRS standards, which are like the general accepted accounting standards with Canada, they don't know what to do with it. And we look at the Credit Union Act and it's not touched on. And we look at the credit union regulations and it's not touched on. So it's one of these things it's a bit of a relic that I think is a bit of a solution to a lot of the world's problems. Because if you actually have a tether of something like a tangible asset that basically forces you into financial prudency, you can't get away from like all this malinvestment or all this money or currency printing that they've done over the last number of years. So I think it's an excellent solution, and altruistically, we're hoping that more credit unions across Canada start taking up this charge as well, because people are voting with their feet. They understand safety and security. They're coming to us in groves, and we can't help people that are outside of our province, unfortunately, because we're only regulated to operate within Alberta. So,
Right, and I'd agree with that. Next question. Any advice about what to do with the money we have in one of the 5 big banks here in Canada? Should we withdraw, leave it, invest it in stocks, bonds, gold and silver, et cetera, et cetera?
yeah, so if it's under your $100,000 mark, I have no doubt in my mind that you're going to get paid back if that's the case. Part of the challenge is there's, even with CDIC, they only have enough for about 1.5% of all the deposits that if everything went sideways. So naturally what they do is they would turn to the Bank of Canada and basically get them to print. And so meanwhile, while you're waiting to get your deposits, my fear is that if they do all this trillions and trillions of dollar money printing, that inflation is just going to absolutely take off. So I think it's important to understand that your levels of insurance at each organization. If you're investing in stocks, although I'm not a financial planner, I advise you to sort of go talk to your financial planner. There's no insurance for stocks. If the stock market crashes, that's your tough luck. There is insurance if you're with a broker and you have cash in your brokerage. There's insurance for that. And I think it's important not to get hyperbolic with something like this. Like, don't take all your money and invest it into precious metals and gold and silver and things like that. That's not what I'm proposing. A little goes a very, very long way, especially with what we're talking about here. The general sound advice is, depending on your economic circumstances, again, talk to your financial advisor, but gold and silver at 5 or 10% of your portfolio would be just fine to do very well. Bonds, be careful with long dated bonds, because if you lock into a long dated bond, say like 10 years or something like that, and the interest rate is not bad right now, you'd probably get 4.5 or 5% on a long dated bond. But what happens if the inflation gets hot again? What if it's running at 10%, 15%? All of a sudden you're wiping out your real buying power and you're stuck. So my recommendation for that is stick to shorter term GICs or bonds that mature, 1, 2, 3 years, where you can actually reprice to a place where it's actually you're keeping up with inflation, if you will, if things change in the world.
Right. Just a quick one from me. You think the numbers coming out of the government that talk about inflation, like the CPI, do you think that's an accurate measure of inflation, or do you think it's underreported?
Absolutely underreported. And there's, if anybody's interested, there's a website that you can go to called shadowstats.com, and it's US based, and they've been tracking it for about 50 years about what the inflation measures are 50 years ago and what they are now. And so if you actually had the same measures that you had 50 years ago, inflation over the past couple of years would have been running at 15, 17, 18%, whereas they're reporting it at, 6, 7, 8%.
Right.
So
Right.
and it allows them to do a number of things. They don't have to pay out, for something like CPP, it's linked to inflation level. So the higher the inflation level, the higher the government actually has to pay out. And so it basically, you get squeezed there, as well as tax brackets and things like that. It's to their benefit that inflation's running hot and they keep those tax brackets in the same level. So there's like a number of incentives for them to showcase that inflation is slow or lower than it actually is. And effectively, it's the same organization that produces those inflation reports that actually measures the inflation. So it's like the chicken guarding the hen house.
Right. Maybe a bit of a conflict of interest.
Yeah,
Yeah, you
absolutely.
figure. Here's a good one. Okay, so could the government force you, the Bow Valley Credit Union, to freeze funds of customers?
So you can read between the lines some degree with this, and I'll just tell you anecdotally. During the trucker convoy, we didn't freeze anybody's accounts. We heard the Emergencies Act order. It's the same time as everybody, but we wanted to go, hey, wait a minute, we want to figure out what this exactly means. And we actually didn't even get direction from OSFI or Fintrac to do something like this. It was absolutely baffling that ATB, RBC, all these big banks just jumped on the bandwagon and decided to start freezing people's accounts, whether they contributed $5, $25. Oh, you might be related to a family member. Who knows? Oh, you were buying a jerry can and you were going to fill it full of water, that type of thing. It was just baffling to me. So if this ever came up again, we would be very thoughtful and we would take a look at every single individual circumstance, and see what we could do, because we work for our membership. We don't work for the government and their political agendas. It's important to note, if the RCMP came to the door, had a proper court order, and said, you know what, this Tanner guy, he bought a jerry can and he filled it full of water and he was marching around in Ottawa, we want you to freeze his accounts. There's not much we can do. And that's why we need an Alberta Bank Act and a revision to the Alberta Credit Union Act, so we can get out from underneath of this.
Right. Yeah, makes perfect sense. Again, the less power that a central authority has, particularly with something so influential as money and banking, the better, in the interest of freedom. Now, I'm wondering, Lori asks, is Bow Valley a gold-based bank? So maybe if you could just describe how Bow Valley Credit Union works with gold. Like, for example, do you have 100% reserve ratio or things along that line? How exactly does the gold commodity work with your bank?
So we're effectively trying to straddle the fence between two different worlds, the hard asset money world and the fiat world, and be able to sort of help people transact in both. You can't back 100% of your deposits with gold, otherwise you have no fiat currency. So like I have staff to pay, I have building costs, heating, computer systems, things to pay for type thing, and that's all done in fiat cash. So we actually have to have profit in fiat. And so we're working on this again with our regulator, and we're haven't come to a conclusion quite yet, but stay tuned on this. And we're trying to get to a place where we'd like to be able to back up our equity completely with financial, and basically what it is a reserve of gold that we have. And it doesn't necessarily need to be gold. Interestingly enough, one of the most successful banks in U.S. history was owned by Benjamin Franklin, and he backed it up with farmland. And so, really interesting case, something that we could look at doing here. But for our purposes, gold seems like the best solution. And once again, we need to work through this, and we'll get more details out to people on this as we sort of get to the finish line. So.
Right. John asks, what are your thoughts on Bitcoin? I like that question.
I like Bitcoin. I do have a little bit of it. My probably biggest issue with it, and both gold and Bitcoin have sort of their pros and cons. They're working really hard to snuff out those on and off ramps for cryptocurrencies. Some argued, and put on your tinfoil hats for this, that's why they went after Signature Bank and Silicon Valley Bank, is because they catered to the cryptocurrency. So if you can't get on or off the into fiat currency, I'm not sure what good it does you. But again, the pro is that you can go halfway around the world and basically understand a word sequence and bring your money with you, as long as you can get it off ramped. Same thing with precious metals. Physically, you have to take them with you. You might not get through border crossings, that type of thing. So each one of them has their challenges. Each one of them has their plus. But at the end of the day, I own both. So,
right. It's a good one. Next one here. With the increased interest in your credit union in Bow Valley, do you plan to open any more branches throughout the province?
Yeah, absolutely. We're looking at models, and of course, there's a lot of interest on what we're doing just because of our stance on basically the world in general and how we've acted over the last couple of years compared to some of the other financial institutions. We're working with a number of groups, and so to make a branch viable, like a full service, full branch, big branch, you're paying for staff, buildings, ITs, infrastructure, and that type of thing. It takes about 50 or 40 million in deposits. And so what we do is we take those deposits, we put them into loans or investments, take that and make a return on them, and that in turn makes a profit. So we probably could put a couple of desks and a computer and like a cash machine in locations for 10 million in deposits if we had that type of money. So it is possible, and we do have plans for expansion, and it's just we're hoping to do a bit of a pilot project fairly quickly on something like this. So,
right. Oh, exciting! Because it's, again, I can't endorse them highly enough. Here's a good one. I like this question. Do you think? Well, I'll put it in two parts. Do you think the U.S. dollar is going to be replaced, like as the world's reserve currency? You think it's losing power?
Yes, eventually, but I think it'll take a long time.
How long?
Decades.
Okay.
So we've probably seen a lot in the news lately about the BRICS nations moving away from the U.S. currency. About 20 years ago, 70% of the worldwide transactions were done in the U.S. currency. Right now, it's about 59, 58% of the world's transactions. So that's still a big chunk of the world's transactions in the U.S. currency. Funny things happen when you get below 50%, though. So I may be surprised, but it's taken 20 years to get below, reduce 11%. It may be a lot faster, but I would still guess it'll take decades.
Right.
And it's not the U.S. will fight back against this as well. It's not like, well, we lost it. Sorry, guys. They're going to come up with some idea how to correct this type thing. And it doesn't necessarily mean the end of the world. This happened just as recently as in the 40s. Britain used to be the world reserve currency. The pound sterling used to be the world reserve currency.
Right.
It lost it. It happens. And you have to be careful that it doesn't mean the end of the world. So
Right. Yeah, I'd agree. Like, I have no problem with the dollar not, no longer being the reserve currency of the world. I see at least in the short term here, I don't see any massive implication except a change in geopolitics. But that's a good question. So what about BRICS? What are your thoughts on BRICS? There's a lot of questions just generally about it. What are your thoughts on it? What do you think will happen because of it, et cetera, et cetera?
Yeah, it leads in quite well with the last comment. So typically what the U.S. does is it has what's called the U.S. dollar wrecking ball. And so what it does is it raises rates and it crashes everybody's currency around it. And basically these BRIC nations are sick of this happening. And so the ultimate commodity is energy that people need to buy. So because the US dollar is the world reserve currency and they price oil and gas in US dollars, that's why I think it's going to be around for a while. But these BRICS nations have started trading, especially with Saudi Arabia, in their own currencies. So it's not like Saudi Arabia said, no, we're not taking US dollars anymore. It's just like, no, we're willing to take yuan. We're willing to take rupees and things like that. And so it definitely reduces its dominance. But back to what are they going to settle all these currencies in? Because the thing is, it's not unusual for different countries to not trust other countries' currency because other countries are doing the same thing with their fiat currency. So ultimately, I'm taking a bet that they're going to have to settle these in gold. So yet another sort of base case of why I think it's important to hold it.
Right. Oh, I would love it if Alberta could, be paid among other things for our oil in gold. I think that'd be excellent personally. But so of course here in Canada, we've sold off most of our gold. I think we have a couple dozen ounces left with the central bank. At least that's as far as I know. And I've heard no change in that matter, right? Is that correct?
Yeah, Bow Valley Credit Union in their stores holds more gold than the Bank of Canada.
I don't think that needs a comment either. There you have it. Yeah.
And we've seen such incredible uptake with this initiative, and it's not even completely flushed out yet. If Alberta was to do something like back our financial institutions, all of them I'm talking about, so all the credit unions, ATB, and basically mandated that they needed to have 20% gold reserves in their stores, the capital inflows to Alberta would be staggering. Just staggering. People from around the world would absolutely rush to invest in Alberta. And I think there's an incredible amount of economic horsepower that could result just from this relatively simple change within our financial system.
Right. Leanne asks a good question. She asks, why not use oil and gas as a backing? So I say maybe, well, oil and gas is a bit more volatile, perhaps. At least in economics, I like stability, with regards to money, especially. This is with regards to backing a currency. If you have a currency that looks like this with regards to value and so on, it's hard to predict what to do tomorrow. And so it makes investing difficult. It makes saving difficult. But maybe you have something to say about that as well.
Yeah, no, I would suggest any commodity would probably be all right. To your point, yeah, it does have a lot of swings in it, and you also use it. So yeah, you can use gold in dental work and electronics and things like that, and jewelry, but inherently it's one of these things that beyond that it's pretty useless. But the thing is, it's worldwide recognized as being a currency, and it's durable and it lasts the test of time. You can divide it, and there's a number of traits of gold that make a lot of sense compared to something like oil. Like I don't mind holding a few gold coins in my sock drawer, but I wouldn't carry a couple of barrel of oils in my sock drawer. So.
Right. Yeah, or in your vehicle to go get some groceries. Yeah.
Right.
And it might cost a barrel of oil with the price the way groceries are right now. At any rate, okay, someone asks, John here asks, I have a trading account with RBC. How difficult is it to transfer over to Bow Valley, to your bank?
Not hard at all. So we have a platform called Qtrade, which is owned by the credit union system in Canada. It's like a brokerage trader, probably similar to what you're using it over at RBC. And basically what you do is just start up an account at Qtrade through us, and you can transfer things over. You can transfer over RSPs without triggering a tax event. You can transfer over in kind, which means, stocks, bonds, mutual funds type thing, or you can do it with cash or both. and it doesn't trigger a taxable event.
Right. Okay. Margaret, she goes, the rumor is that they will kill smaller banks first, and that that will be left are the big four. So what does that mean for Bow Valley Bank, and does that concern you? And maybe you could expand on that. I've heard, well, I haven't really studied it much, but I've heard the same in America, where you have, at least for a little while, you had smaller regional banks concerned about runs, and perhaps you had bigger guys like JP and Chase and so on that were licking their chops, knowing that if you can crush the smaller banks, people have no option but to conglomerate into their empires. So what do you think?
Yeah, they didn't do any favors for the smaller banks in the U.S., that's for sure, just even with their rhetoric. Inherently, there's a couple of things to say about that. Inherently, credit unions are a lot different than the big banks. So we cannot get over our skis like the big banks. So what I mean by that is our deposits have to match our loans or investments. We can't do a bunch of financial gymnastics like derivatives and swaps and trades and asset-backed paper, and I'll come up with all these different ways to be. And there's a number of reasons for that. There are credit unions out there that do that, but we don't do that type of thing. We just basically match our deposits with our loans. So right there, leverage is where you get yourself in trouble within a financial institution. And basically what you're trying to do is squeeze every single dollar from what you can and make profitability for your shareholders. As a credit union, we don't care. We care about profit and loss, but we don't care about it as much as the big banks do, because our membership is our owners. And so, yeah, we could go to our membership and say, you know what, we're going to charge you $100 a month for banking fees. We'd make some profit, but there'd be an awful lot of upset members that actually own the credit union. So,
right, which might not be so good for business.
that's right.
Okay, with that, like you mentioned when you were talking about how capital was the issue with Silicon Valley, Credit Suisse, etc. Maybe you want to expound on that a little bit and what exactly happened. Like I've heard things where, economists have said, well, the Fed in America gave, for example, Silicon Valley basically bad information. They gave them false information. And so Silicon Valley invested in a way that it wouldn't, or that rational investors wouldn't normally do. And then, of course, when the chickens came home to roost, it bit them, it got them. I've heard other guys say, you know what, just the investors themselves or the managers themselves at Silicon Valley were just plain greedy to a fault, that they were willing to basically compromise on reality and act like complete fools to try and get an extra dollar. So what do you think? What's your analysis on that?
I would say it's column A and column B there. So there's two ways that a financial institution can go broke: liquidity and capital. If you don't have enough liquidity, that's the quickest way to go broke. Capital is the other way, that if you don't have a capital to absorb losses, you're going to go broke. So what happened with Silicon Valley Bank, and you're absolutely right, the Fed in the US gave them bad information that said that, oh, we're going to keep interest rates low forever. And so what they did is they took all the clients' deposits and went out and ran and bought treasuries at those really low rates. And so what happens a few months later when the interest rates rise, the same thing, like with our earlier example, it's like, what's more value put to you, Tanner? Is it the $100 treasury that pays 5% or the $100 treasury that pays 10%?
Right. Obviously, higher stuff, yeah.
So when the interest rates went higher, all of a sudden the value of all those T-bills that they bought over the last number of years went down. And so they got a bunch of losses. That's not ultimately what killed them, because they could have basically just wrote it out and you would have gotten your principal back at the end of the term. It's just that people caught wind of this and basically said, I want my money, I want it now. And so basically what they caused was a bank run. So if they had enough capital, it wouldn't have been a problem to basically absorb those losses. And if they had enough liquidity, they would have been able to absorb all those people coming to get their deposits. So yeah, little a, little b, and ultimately, you're right with your second comment. They were being greedy, because what they could have done is they could have spent a little bit of money and bought a swap, is what it's called. And basically what it would have done is it could have protected against that interest rate rise in the financial institution. But that cost money, and that would have eaten into our profit and our bonuses and things like that. So absolutely, they got greedy. That was banking 101. That was rookie stuff that they blew themselves up with. So
Right. So then with that, and again, this is of course just speculation. If we knew the future, I'd be rich. What's your diagnosis on the current health of the banking industry in Canada and America too? But let's say Canada, sure.
I'd say Canada is quite sound. Europe, not so much. US, not so much. I don't think we've seen the end of this. We'll see. If they continue to raise rates, which they might do, and inflation stays hot and they try and get it under control, we haven't seen the end of this. Because I think probably the next thing that will blow is the commercial banking sector in the US. And that really affects the smaller regional banks. And again, if they had enough capital, they'd be able to absorb these shocks, but they might not have enough capital. So
Right. Like a big, massive crush. Yeah. Here's a good question from Brandon. He says, there seems to be a lot of credit unions merging. Is Bow Valley merging with any right now?
No, we have no interest in doing that. We have different boards, we have different policies, procedures, different managements, different values, which is probably the number one thing why we wouldn't merge with any other credit unions. We're profitable, we're sustainable, we don't need to merge.
Right. Yep, no, for sure. AB, I don't know her name or his name, asks, how can credit unions offer 100% guarantees on our account assets if credit unions' own asset values are reliant on a stable financial market?
Well, that's to take up with the insurer. They've guaranteed it, and effectively, ultimately, it's first of all, it's the first line of defense is our statutory liquidity. Second is the Credit Union Deposit Guarantee Corporation. Third is the Alberta government. And so the Alberta government would basically have to come up with the money if something went sideways. Now, I'm not so concerned about the province of Alberta being able to come up with something like that, but something like the province of Ontario, who's constantly running deficit positions and doesn't have any monies in the coffer, you're going to have to go to the Bank of Canada for a bailout. Right.
And that's something different entirely.
Yeah.
Right. Something much more powerful. Here's a good one. Okay, so suppose that the American dollar does go down, really crashes or something, and all Western countries' money value. Suppose that they do go down, and if the money from all Western countries is based on a US dollar, what would happen with our money, with our Canadian dollar? Would it collapse too?
Well, thinking about this, paradoxically, the US dollar will actually rise when it's collapsing. And that's hard to get your head around, and I could talk for hours about it. But what will happen effectively is all the money will come rushing back to the US. And it'll devalue all the other currencies in the world compared to the US dollar. So yes, the Canadian dollar would decline in comparison to the US dollar. And, that's thinking about the system with currencies. It doesn't mean that the US dollar isn't devaluing and your purchasing power isn't going down, but the value compared to other currencies of the US dollar would go up. And so I think that's always sort of been my indicator. When you start seeing gold and the US dollar going up week after week after week after week, we're pretty close to the end of this game.
Right. And I've heard rumors that gold and silver will, again, it's not financial advice, it's just what I'm reading online. Sometimes they're wrong, but I've heard rumors that gold and silver are going up. So something to perhaps research and look into and talk with a financial planner or advisor about. Leaf asks, as Bow Valley, considering you're only in Alberta, who are you regulated by? And does it help us as individuals in Alberta?
Yeah, no, absolutely. So we're regulated by the same person that give us our deposit insurance. So they have vested interest in keeping us solvent. It's the Credit Union Deposit Guarantee Corporation, which ultimately reports to the Ministry of Finance, Treasury and Finance in Alberta. So,
right. So there's safeguards in place, so to say.
Yes.
Right. So since you've started this initiative, have you seen an increase in interest and, what would you say? Yeah, no, interest from people coming to your bank saying we like what you're doing?
Yeah, absolutely. We can't even keep up, frankly. And just a ton of interest, ton of people that are just, and what gold really is, it's just one word, but it's really what it stands for. And it's a lack of confidence in the system is basically what it is. And so when people hear that there's actually a financial institution that's trying to put some stability in place to basically shore up confidence, people are going to come running. So we've seen a massive increase in people coming to our organizations to the point where we just can't keep up. But we're looking to expand to be able to sort of cater to it, because we recognize there's a need. And altruistically, as mentioned before, I would love to see credit unions across Canada to do this, because I think it's one of the few solutions we have to try and fix the financial system.
Right. Here's a good question from Linda. She says, what questions should we ask a banking institution that we're thinking of moving to ensure privacy, safety of money, stability of the bank, etc.? If you were moving to a new bank, what would you ask them?
Sure. Yeah. Like anecdotally, I start with the questions that are sort of top of mind in the last couple of years. What did you do during COVID? Did you force people to wear masks and get vaccinated? What did you do during the trucker convoy? What do you know about your third party providers, and who are your partners and things like that? I think these are just, they're not aggressive questions, but the thing is, I think those type of questions really answer a lot. And somebody on the front line in most organizations would go, I don't know, they'd be able to tell you that if they wore a mask or not. But the thing is, I wouldn't quit until you get the answers that you actually want. And, I say this is my saying that I have all the time, is like, people spend more time researching a TV than they do their financial institution. And what's a TV? $300-400, but and yet they have thousands, hundreds of thousands of dollars tied up in their financial institution, and they haven't done a ton of research behind them. So.
Right. Here's one from Paul. He says, why can't Alberta create a silver or gold currency? Good question, Paul. I agree. What do you think?
Well, interestingly enough, 2 or 3 weeks before the premier election of Danielle Smith, she came to our board planning session and talked to our board. And she's in this camp of basically trying to figure out this financial Rubik's Cube and trying to fix the system. So I would absolutely be a proponent of backing Alberta credit unions and ATB with precious metals. And as mentioned before, I think capital will just come running. Right.
Oh, I agree. Like, again, it sounds idealistic at the moment, but I would, if Alberta became independent, I absolutely think you could back it with the currency with gold. All you'd have to do, of course, is simply one day switch to, sounds simply, and actually, I mean, all of the bureaucratic stuff aside, it actually is simple enough to switch, say, from a Canadian dollar to an Alberta dollar, even if you just switched at a 1-to-1 ratio for $1 Canadian dollar for $1 Alberta dollar. And as you were doing that, as you were switching, you'd have the bank start buying gold until the banks themselves could back the Alberta dollars in their banks at the reserve ratio. This is more complicated than it needs to be. But at any rate, I think you could do it. It just takes some political willpower. At any rate, it's a good question. Rosanna says, can you explain open banking?
Sure, yeah. Full disclosure, I do not like open banking at all. So the simplest thing that I can say about that is if you've ever used like an accounting program or like a budgeting app or something like that, usually what it does is ask you, one of the first questions is, hey, can I go grab your information from your bank? And what they use right now is a technology called screen scraping, but it doesn't work very well. It sort of just, it might figure out that something's a date and something else is a dollar, and it's not really working all that well. With open banking, it would have laser precision on what exactly is in your bank account. The biggest problem that I have with open banking is the feds are actually wanting to be the hub for where all that information gets traveled through. And so when you switch on something at TD that says, oh yeah, go out and grab my information from TD, it doesn't just stop at TD. It goes to every single financial institution that's attached to open banking and grabs the information and siphons it through the hub that the government has. So effectively, the government would have a complete financial picture of you. We're not building the infrastructure. We've been given the okay that we don't need to opt into open banking. And so we're not building it. And so there might be something that comes knocking at our door, but it won't get anywhere because the thing is, we don't even have a path for it to get your information. We don't like the idea of that much power and control and financial information floating around out there. So,
right. We'll just do one or two more questions. All the questions have been excellent tonight. I've been so excited and so happy to read all of them. Leah asks, what's the difference between, for example, ATB being an Alberta bank and your bank, Bow Valley?
So they're a Crown Corporation. So I don't love that because they basically are legislated to do some of the political will that happens there. But aside from that, so they're moving to the same regulator that we are, the Credit Deposit Guarantee Corporation. But what was really interesting under the trucker convoy is, I think they pushed back to some degree and said, oh, well, we don't fall under these rules. We're regulated by the province. And then somebody in Ottawa stepped in and said, no, you're not. You are regulated by OSFI. And they snapped into position so quickly, it made my head spin, and started locking up people's accounts during the Freedom Convoy. So that could change. And again, it goes back to political will. But it is a pretty powerful tool for Alberta if we're able to sort of harness it properly. Right now, I think they're under the control of the feds.
Right. Last one for tonight. It's a good one to end with. Debbie asks, okay, so there's all of this bureaucratic nonsense that's occurring and happening, and bureaucrats are trying to capture more power. So what can we do today to stop all of this from happening?
The bureaucratic nonsense?
Well, sure. And this transition, or try to transition to central bank currency, digital banking, et cetera, et cetera.
So there's a number of problems in the world today. And I think finance is a big one, but there's education, there's healthcare, there's the police service, there's the justice service, you name it. There's a number of things that we got problems. So being just a banker and an accountant, focusing on mostly the financial world for a better part of my adult life, I think there is a big solution within finance. And if you cut off the currency printing, you cut off a lot of this nonsense that happens at the banking level. All of a sudden, they have to start being efficient. All of a sudden, they can't give to programs that don't have a return on investment. All of a sudden, they have to be really focused on what they're doing. You start getting people in political positions that actually want to be there rather than just trying to jockey for power. I think it causes a lot of solutions to happen as a result of not being able to print money.
Right.
Print currency.
Yes.
Yeah.
Oh, I would completely agree. And I think we do exactly what we're doing right now, which is even this, there are so many people watching. It's so encouraging because, for example, a politician would be over the moon to have numbers like this talking about something which historically has been treated as something which is mundane. And no one before all of this nonsense became more and more public was talking about, for example, central banking, or what's the state of our currency, or how does the currency system work? How does the money printing system work? And what are the consequences of printing uncontrollably? How is our government spending, et cetera, et cetera? And so I think that the information which was provided by yourself and the community of individuals that came out, at least online here, to listen to you tonight, provides invaluable information that they can then approach their MLA, their MP, and say, I learned this and this and this from a reputable individual who knows what he's talking about with regards to money and banking. Why is something opposite the current state of what we have right now? And what are you going to do about it? And so I think that meetings and webinars like these are encouraging. I think they're exciting. I think it details just how powerful this movement is to bring back sound monetary policy, sound banking, and actually a coherence and a submission to reality itself. And so with that, Brett, I want to thank you for joining us this evening. I had a lot of fun. I learned a lot. I see the comments are all excellent. The praise is high for you. And if you have any more questions, Brett's at Bow Valley Credit Union. As far as I know, they're open every day of the working week. And I know they're busy, of course. And so you might have to work to reach them, but they can reach you. Is it on email? Just your website, bowvalleycreditunion.com, is it?
Yeah, you can either go to our website or you can even go to goldbacked at bowvalleycu.com. I read all the emails that I get. I may take me a bit of time to try and get caught up and things like that, but I will get back to you. And just thanks, Tanner. Really appreciate it. It was a lot of fun. It's much better to have a conversation about these things and actually answer some really critical questions, because there was a lot of good ones out there, and we should be asking questions. It's an important time. We've got an election coming up. We should be asking these questions of these politicians as well, and seeing where they lie, because this is a pretty critical election in my mind, and we have to get it right. So.
Yes. Oh, I completely agree. Give them all the pressure that we're able. And again, this webinar will be available, as far as I know, for as long as the webpage for APP is up. It's on my page too. So you'll be able to rewatch it, look at all the information. The websites and so on are at the bottom of your screen. And with that, I want to wish everyone here just a good night, and hope the warm comes. So thank you for joining us. Have a good night.
Thanks all.